Hi, I'm Andrew Rodick, a portfolio manager and partner with QWealth Partners.
Hi, I'm Kevin Higgitis. I'm a portfolio manager and partner at QWealth Partners.
Today, we're going to talk about the QWP1900 fund, the Select Strategic Assets Fund, developed here at QWealth to provide access to non-correlated alternative asset strategies within client accounts. So Kevin, we'll talk about the QWP1900 fund, the Strategic Assets Fund. Can you maybe talk about the mandate of what we've built?
Absolutely, Andrew. So essentially, the mandate is building a portfolio of non-correlated alternative assets. So building and structuring something for our clients that if the stock market and the bond market, as an example, went down at the same time, we would have something that would be more resilient, something that maybe wouldn't go down nearly as much or maybe not even at all. So when we talk about non-correlation, maybe if you wouldn't mind touching a little bit on how that looks and what that actually means.
Yeah, so when we were thinking about non-correlated assets, a big part of the strategy is you're looking for assets that aren't necessarily impacted by the same market factors that we see in the broad public stock market. Now, you can still have a level of correlation, but the market forces themselves might not be the same piece that's drawing or driving the returns of the assets that are considered non-correlated. So those non-correlated assets might have a different level of capital appreciation. They might have income streams off of the form of assets that they are. And that is important because if we're seeing correlation, especially in the stock and bond markets, assets that maybe aren't being impacted by those market forces the same way, they give us, to your point, some of that resiliency. And we can dive into what some of those non-correlated strategies might look like. But that's what we're thinking about with correlation, a connectivity between the value of your other assets versus the value of these assets. And non-correlation is a lower level of connectivity between the two.
Right. And you know, these are assets that in a lot of cases, a lot of people may not have access to or may not even know how they can access them. So an example of that would be investing in things like music royalties. So we use a firm that we partnered with called ICM, and we have a music royalty fund that we use as a sleeve in our fund. And it's gives people access to 4,295 different songs and 30 different catalogs, of which they probably could never access on their own. So just having things like that in the portfolio really gives it that non-correlation to the stock market and the bond market.
Yeah, so when we're looking at something like music royalties as an asset class, there's capital appreciation in the value of those catalogs, but the royalties themselves become that income stream. And so they're essentially an alternative fixed income stream that we're adding in to the portfolios by adding that sleeve of assets within the strategic assets fund itself.
Exactly.
And so that's where we start to get that diversification, but diversification within alternative assets, which sometimes folks aren't thinking about. Alternative assets, such a broad category.
Right.
And so they think, yes, there's real estate, for example, that could be considered an alternative asset, or folks might have heard of private equity. But are they thinking about music royalties?
Yeah.
It's probably not. Infrastructure and some of these other asset classes, a little bit more maybe bespoke to their needs, depending on, do you need capital appreciation and some income from the assets that you own?
And, Andrew, as you mentioned, one of the investments is real estate. And there's a lot of different types of real estate that we can own. A lot of people may not know that they can actually own storage units. And there's a company that we partnered with that has over 9.3 million square feet of storage units in Canada and the United States. It's been a great investment, not only providing a great income stream, but capital appreciation as well. And another big one is infrastructure. And maybe you can add a little bit more to that, Andrew.
Yeah, we've partnered with a private infrastructure firm based out of Toronto, a large institutional asset manager. But infrastructure as an asset class, going back to part of the conversation earlier, Kevin, when we're thinking about capital appreciation, but also infrastructure that produces an income stream, essentially a rent component that's becoming yield for our end investors, it's a really interesting asset class. So this infrastructure fund that we've invested in through the Strategic Assets Fund, we have access to cell phone towers and cargo terminals and this sort of infrastructure that is got that rent and capital appreciation component. And going back to non-correlation, this is the type of infrastructure. It has this resiliency because it's not only the backbone of our economies, it's really the backbone of our societies. And so having infrastructure like cell phone towers, we're not going to start, we're not going to stop using our cell phones, even if the economic conditions get a little bit more choppy or the market starts getting a little bit more choppy and volatile. That doesn't impact how we use certain forms of communication or otherwise. So infrastructure becomes an interesting asset class in that sense.
Yeah, and it's an asset class that your everyday average investor typically doesn't have access to, right? Because a lot of these investments are meant for institutional investors. So large pension plans or large endowments typically invest in these type of investments.
When we think about some of the bespoke categories, Kevin, of investments that we're looking to add, so we've added managed futures, we've got infrastructure, we've talked about music royalties, different real estate in the form of storage units. Maybe you can talk about a few more of the asset classes we're looking to add in the next little while.
Sure. One of the ones that I'm pretty excited about is a farmland, ag land investment. It's a global investment, so covering countries like the United States and Argentina and Australia and New Zealand. So not only investing in row crops like corn and wheat and canola, but actually perennials as well. So things like walnuts and hazelnuts and pistachios and even blueberries and cranberries. So not only are we receiving income from selling the product, but they actually own the farmland, which is pretty amazing because most people would never have a chance to own farmland unless you're a farmer, right? So to be investing in that and receiving the income stream and then a capital appreciation, because as we know, farmland will increase in value over time. So another great investment that we're looking at adding to, one of the things that is great about the structure that we built is it's actually a pooled fund. And within that fund, because you're pooling assets together, what we're able to do is get better purchasing power. So that means a lower cost for our clients, so we can pass that benefit on to our clients, but also the ability to hedge certain investments that we have. So as an example, we hedged one of our gold investments, and maybe I'll let you talk a little bit more about that, Andrew.
Yeah, the Q Wealth pooled fund structure, what we're thinking about here is we can apply strategies like hedging within the pooled fund, which then gives a certain strategic consideration to the end client. So instead of having to go do hedging for a client directly in account, they're getting that experience by owning the asset, the pool fund. And so, for example, if we have an asset where we've seen some good gains, some good appreciation, putting in a hedging strategy where we're trying to lock in some of those gains while also managing the downside risk as best we can, allowing some room to run. I know in future videos we'll talk about specific hedging we've done to date as well as plans for the future, but that's just an example of a value add strategy, right, that we can deliver within the pooled fund structure.
Exactly. Andrew, within Q Wealth, we've got some experts right in-house, which is absolutely fantastic. But how would you say those experts, as well as some of the third-party experts that we deal with, contribute to the strategies that we're putting together in the portfolio that we're putting together?
Yeah, Kevin, we're very fortunate to get to work with some great experts here in-house at Q Wealth. You're going to hear from them in future videos. Larry Berman, our Chief Investment Officer, Alfred Lee, our Deputy Chief Investment Officer, bring just a wealth of experience. We're talking 30 plus and 20 plus years of experience working with major Canadian institutions and banks in their global asset management divisions. So their networks, the networks that they're part of, not only, credentials aside, obviously both, CFAs and talented individuals, but when you think about the network effect, that also gives us access to third-party professionals too. And so now we're able to work with some great institutional asset managers across Canada and North America. And so now we're getting access to some of these additional asset classes, again, when we're talking about non-correlated strategies. But then there's the other added component. When you have that expertise, it's bringing in the due diligence. The ability to go thoroughly into an investment and really understand the complexities of the investment and how it can work together in kind of harmony within the strategic assets fund to give clients the best diversification in that strategy. So we're very fortunate to have that expertise. You and I are privileged to co-manage this fund for clients, but I think having other experts at the table, having that brain trust, that's where we can provide that additional value to clients, that they know they're getting that robustness in our approach to building out this fund.
Thank you for taking the time to tune in today and learn a little bit more about the Strategic Asset Fund. We're going to be doing more of these videos, so make sure that you tune in again in the future.